What's up, guys? My name is Nick, and welcome to the channel. So we have a big video today. I'm going to be going over why the market has been down this week and going over some brief news about inflation, what's going on with Russia, and then I'm going to pivot into the top stocks to buy for 2022. And these stocks are especially great because they will help you combat inflation with high dividend growth CAGRs. So, guys, as you know, this is my passive income portfolio that I track every week. So if you guys want to follow along and see how a real portfolio performs, you can do so by subscribing to the channel and following along for free. And guys, I've always been transparent, showing you like what my portfolio has done. As you can see, I'm down, well, right here, market gain, I'm down $741.54 for the week, which there was one day, I think it was Thursday, I was down like $820 or more. I posted on my Instagram story. It was absolutely insane. But guys, the thing you need to remember is that don't worry about the stock market dipping. Don't worry about your stocks falling. However, don't worry about it as long as you own solid companies. Like if we look at my portfolio, you can see all that red. However, most of my stocks are those boring blue chip stocks that have been paying dividends for decades. They've been growing their dividends for decades. Look, Microsoft's down almost 3.5%. Merck down 2.44%. PG, Procter and Gamble down 3.24%. So as you guys can see, but all of these stocks like American Waterworks, utility company, you need water, you need clean water. They're down 3.51%, but I'm not going to sell them because they're a great company. And so that's sort of my mentality is I can watch my stocks go up and down and I don't feel anything. I don't get a sick feeling in my stomach because I'm confident in my stocks. And I know that over the long term, 10, 20, 30 years, they're going to perform. So guys, you've seen my 1 week. We can check my 1 day, down $194.45%. And I'm pretty sure that actually beats the S&P 500 because the S&P 500 was down, I think 1.9%. It was a pretty brutal day. But let's go into my activity and look at the last week. So we're going to start here on February 7th. I received a $5.57 dividend from Texas Instruments, TXN, and I think that's the largest dividend I've received from them. Then, of course, as always, every single Monday, I deposit $125, and I bought some JEPI, some NUSI, and some Q yield. And it looks like on February 9th, I received a 79-cent dividend from MasterCard, and on February 10th, I received a $1.20 dividend from Apple. So guys, let's get into the news and let's look at inflation. So as you guys can see from the title, U.S. inflation, the U.S. inflation rate accelerates to a 40-year high of 7.5%. So that means if you have $100 and you just left it in your savings account with that 0.1% or 0.01%, interest rate growth, your $100 would be worth 100 or not 102. You would lose $7.50. It would be $72.50 what your $100 would be worth from 2021 to 2022. That is absolutely insane. Inflation is crazy right now. And I actually want to show you a website called Shadow Stats, where they looked at the inflation rate based on 1990. And so the official inflation rate that they're giving us right now is this orange line. And the blue line is the 1999 or 1990. And as you can see, it's over 10%. Looks like about 11. Yeah, it looks like about 11 if we gauge that. Maybe slightly less than 11%. However, if we scroll down and base it off of 1980, you can see that inflation is slightly over 15%. which is still crazy. And just to go back to the 7.5% inflation, I get excited when a dividend has a 5-year growth CAGR of 7%. For example, a stock like Pepsi, they just increased their dividend by 7%, which is amazing. Any other time, 7%, awesome. Now that's not even beating inflation, which is absolutely crazy. So I actually wanted to show you one more thing on inflation. This is my Instagram. You guys, there will be a link in the description, a link in the pinned comment. You guys can follow me on Instagram. And as you guys can see, overall CPI 7.5%, used cars up 40.5%. My girlfriend, one of her goals was to buy a used car at the end of 2021. But with inflation so high, she just decided to stick with her car. And then gasoline up 40%. Utilities, electric up 23.9% and 10.7%. Even new cars have gone up quite a bit, 12.2%. You know, if we look at food at home, 7.4%. Food away from home, just 6.4% inflation. Now, if you guys watched one of my previous videos about my top 5 recession-proof stocks, I went over Procter & Gamble, and I want to say they increased their prices by 6%, and that also helped them get like record profits or record revenue, which is a pretty bad way to earn more revenue, to increase your prices on essential goods. But now, guys, I wanted to go into the news about Russia. So the U.S. warns Americans in the Ukraine, leave as invasion could come anytime. Now, do I personally think Russia is going to invade Ukraine? Honestly, I don't know. I would hope not. And this is one of the reasons that the stock market dipped down almost 2% today, is just the uncertainty, like what's going to happen in the world if Russia does invade the Ukraine. As you can see, America does not want to get involved. That's why they're telling Americans in Ukraine, get out now, because if America goes into Ukraine while Russia is invading, that could start a world war. And one more thing I wanted to show you with this is that America believes that Russia has 100,000 troops near the Ukraine border, which is an insanely large number. I actually read an article that there could be 130,000 troops around the border. Plus, there are Russian allies, separatists in the Ukraine. And right now, they're both performing like practice runs on the border, inside the border. So I'm going to be monitoring this situation. I'm not sure how it's going to turn out. Hopefully, we don't go into war. That would be, that'd be awful all around. And so, guys, now I want to get into the topic of this video, the best dividend stocks to buy for 2022, which is quite an interesting segue right there. So let's look at, I wanted to look at AbbVie first, as you guys know. So as you can see, I have $1,600 in AbbVie, 11.64 shares. So they do have a kind of high PE ratio of 33.8. However, AbbVie is a great healthcare stock, healthcare company. And I want to go over to Seeking Alpha and just show you guys they have a pretty substantial dividend yield. I would say that's high, 3.95%. Solid payout ratio of 41.81%. And guys, this 5-year dividend CAGR, 17.71%. So that beats the 2022 inflation rate. That also beats the 1980 adjusted rate. So if you are looking for a solid dividend payer and paying for 8 years, increasing their dividend for 8 years with a huge dividend growth rate that's beating inflation, I'd recommend that you check out AbbVie, do some research on them, because You can't go wrong with AbbVie. So the next stock I want to look at is one of the best stocks in 2022. PepsiCo, as I mentioned them earlier, have $1,000, 6.17 shares, and they have a good PE ratio at 28.5. Now let's go into Seeking Alpha. As you can see, they have a dividend yield of 2.55%. It's not showing their payout ratio, although I do believe Pepsi has a pretty high payout ratio in the high 70s, maybe the low 80%. However, they're still able to maintain it. They've been growing their dividend actually for 50 years. They just became a dividend king, which means that you've been growing your dividend for 50 years. And they just increased it by 7%. As you guys can see, 7.49%, just 0.01% off of inflation. Still think Pepsi is a phenomenal stock. Super Bowl's coming up this Sunday. When I upload this video, you'll probably be drinking Coke, but eating Pepsi snacks. So guys, moving along, our next stock that you should research in 2022 is Costco. As we all know, Costco, $929, 1.8 shares, very high PE ratio, 44.5. Now, everybody always says that Costco is so expensive, and I agree, but we're seeing a dip in Costco. I think they're down maybe over 10% now. So now would be the time I say do your research, maybe buy Costco. And before I go into Seeking Alpha, I do want to mention that Costco, they're always increasing their revenue. They're one of the safest, most boring companies, but they're also a little exciting when it comes to their growth in China. Whenever they open up a location in China, it is crowded. Like, I've seen the videos, the pictures, they are slammed, like worse than Starbucks, worse than Chick-fil-A. So as Costco continues to expand into China, they're just going to be generating more revenue with their subscriptions and their sales. And as you can see, they do have a low dividend rate at 6.1%. However, they have a very healthy payout ratio of 27% and a great 5-year growth rate of 11.91%, which is beating the 2022 inflation rate. And they've also increased their dividend 17 years. And Costco usually gives a special dividend at the end of the year, every 2-3 years. So I'm hoping for another special dividend at the end of this year. We'll see what happens. But moving on to our next stock, one of the best stocks in 2022 is Microsoft. As you can see, I have $921, 3.12 shares. And Microsoft has a kind of high PE ratio at 31.8. However, Microsoft is one of those companies where I think they're one of the best companies in the world. They have an amazing moat with, their Microsoft Office suite with Word, PowerPoint, Excel, Teams, which is competing a little bit with Zoom. As you can see, they just acquired Activision Blizzard. So Microsoft is getting deeper into games. They already have Xbox Live. They have Xbox Live. They're in gaming, competing with Sony. And then they have their cloud computing business, Azure, which is competing with Amazon. Microsoft used to be 13% of the market. Now they're in the low 30%, about even with Amazon. So they're definitely picking up. And it's a pretty easy sell, easy transition to tell a company like, hey, you're using Microsoft Office. Why not use our cloud computing? So I see Microsoft as one of the best companies, not only for 2022, but for the next 10, 20, 30 years. I'm going to hold on to this company. And once again, another low dividend yield, 0.82%. However, a very healthy payout ratio of 26.61%. And as we all know, Microsoft has a ton of cash, so they are not in a bad situation for increasing that dividend. As you can see, they increase it about 9.37% over 5 years, which is a great increase, and dividend growth for 17 years. Definitely do your research on Microsoft. I think every portfolio should have Microsoft and as one of their top picks. So next, we're going to look at ADP, automatic data processing. I have $853, 4.18 shares. Once again, kind of high PE ratio at 31.4. However, they do the payroll processing for large companies. I use ADP at my job when I check for my pay stub, and they have a 2% dividend yield. They have a decent payout ratio. It's kind of high, but 60% is manageable. They have a great 5-year growth rate, 12.14%, and they're almost a dividend aristocrat. Maybe in 2023, they'll hit that status. So guys, moving along to the next stock, I want to get into Home Depot, $833, 2.37 shares, a low PE ratio of 23.2. So Home Depot has more room to grow. And if we go to Seeking Alpha, we can see that they have a 1.86% yield, healthy payout ratio of 43.85%, an insane dividend growth rate of 19.05%, and they've been growing their dividend for 12 years. One of the great thing about low yielding dividend companies or low dividend yields is they usually have high dividend growth rates, which will increase your yield on cost. So definitely check out Home Depot. And let's move right along to the next best stock for 2022. We have American Waterworks. I've mentioned this company before. They've been around for over 100 years. I have $831, 5.56 shares. And I do have a kind of high PE ratio at 35.7. However, if we go to Seeking Alpha and check them out, they have a dividend yield of 1.6%, a decent payout ratio of 55%, a solid dividend growth rate of 9.95%, and dividend growth for 8 years. And like I said, American Waterworks, you need water, you need clean water. So they take care of that, and I don't see them going anywhere. Like I said, if you watch my top 5 recession-proof stocks, American Waterworks has been around since, I want to say, 1886. They're still here, so I don't see them going away. Now, the last stock I want to go over is Texas Instruments. I have $801, 4.87 shares. And they actually have a very low PE ratio at 10. So they have definitely room to grow. And they have one of the most exciting dividend growth rates. But let's see, they have a 2.7% yield, a healthy 49.63% payout ratio. And like I said, 19.78% growth rate. With that yield, 2.7% is a good yield. And then they go and increase their dividend by that much over 5 years. That is insane. And they have strong dividend growth of 16 years. So Texas Instruments, they are not just a calculator company. They also provide chips for many different industries like automobile, tech. Go ahead and do some research. Do your own research on Texas Instruments. And so that is my list for the top dividend stocks for 2022. Thank you guys for watching. Don't forget to like this video, comment down below. I'll be answering all of them, and subscribe. So thank you guys for watching, and I will see you in the next one.